Okay, folks, welcome to some trade analysis of gold. Now, I just got done watching a video put together by the Chart Guys. They put it out about an hour ago. Today being the 26th, the markets are now closed. And they focused on the 4-hour and 15-minute view of gold spot versus the US dollar. And overall, a fairly good analysis. I think that they have a bias, very short term to the downside, but longer term to the upside. And that's somewhat consistent with my views as well. But what I like to do is build upon their analysis and take a look at the weekly and the monthly charts to get that higher level view perspective of where gold has been and where it might be going. And what I'll do here is I will link to their video at the end of this video. If you're watching this on YouTube, I'll even put a link in the video description area. If you're watching it on our website, I will link to it there as well. If you'd like to take a look, make sure that you click the like button, subscribe, enter your email address. We hate spam too. Get all my videos. Let's go to the weekly and monthly charts. Okay, so what you're looking at here is a weekly chart of, we'll use the GLD. Now, the GLD hit a 2019 high of 125.98. We've pulled back. We have now rallied back up and into the 125 level this week, where we have since sold off. We have a little bit of resistance above there. However, the lower band of resistance is still intact. The elusive target that we want to get to is this upper band of resistance here at the 128 level. If we get up to that level and we break out, it is game on to the long side for gold on a weekly basis, an intermediate term basis. Now, Stochc RSI is hooking up. Volume these past few weeks has been good. One concern I do have is the ultimate oscillator. It is putting in lower highs and lower lows. So the weekly chart looking good. But again, I will mention resistance at the 125 level. And when you bring into the picture the price action of the US dollar, which generally trades inversely of gold and the gold miners, you're seeing a continuation move higher versus last week, a new weekly high. So this is a threat to the rally in the price of gold. Now, what I want to do now is take a look at the monthly chart, because the monthly chart is providing us a very sound picture of where I believe that gold is going in the coming months. Let's go to it. And here you have it. Here's the beauty of using multi-period charts. So far in this video, I've referenced 15-minute charts, 4-hour charts, weekly charts, monthly charts. And you can see on this monthly chart, we broke out back in January. Since that breakout in January, we've been consolidating those gains. And this long-term resistance level, of which we are now trading above, is now acting as support. Volume this month will probably roll in below average, so that's a concern. Stochcs are rising. They are above 50. That is bullish. So I think that we could conclude that the price action of gold from a higher level view, the monthly view, perhaps to a lesser extent the weekly view in the short term anyway, is quite bullish. And if we break out above this 125 level, it's game on to the 130 level. And when you throw into the picture the fact that the TIPS, Treasury Inflation Protected Securities, are breaking out to all-time highs and generally trade in tandem with gold, which is overlaid here, of course, in gold. So we have a breakout on the TIPS, new all-time highs. And remember, the Federal Reserve says inflation hasn't hit our price target yet. We need to not do much. So then why are TIPS breaking out? Why is gold strengthening? And as long as the Federal Reserve denies the existence of inflation, you're going to see the TIPS rally. You are going to see gold rally. So I hope you get some value out of this video. Again, please follow me on YouTube. Subscribe to my channel. Click that bell. If you're watching this on the website, enter your email address. We hate spam too. Everybody have a great night. I'll talk to you soon.